Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks slipped from their latest record-setting run on Tuesday as Wall Street weighed worries over the government shutdown against hope for AI. And everything was actually kind of red today. A couple of winners. You can see some of the information tech names right here. AMD up another 3% on the news from yesterday. Palantir was up 1.88%. And a couple of the names in the comm services space, I guess you could call it the broad comm services market, excluding Meta and Google, was kind of green. A couple of the defensive names, the utility names, and some of the healthcare names, those were really in the green. Everything else was red. Most sectors actually did fall today. Very few were up, and the sectors that were up were the quintessential defensive sectors. For example, gold was up 0.5 percentage point. Silver was up 0.68%. Staples was up 0.68%. Utilities, financials, and healthcare were up 0.4 and 0.05% respectively. The S&P 500 fell 0.44%. The RTY small caps was down 1.37%. Brutal day for small caps. You can see the majority of sectors, mostly the cyclical sectors, the sensitive sectors, really took it on the chin, and that was led by stuff like the discretionary space, as well as tech and industrial. Small caps also took it on the chin. You could see they were the worst performer here today. We spoke about that with the RTY. In terms of mid caps, mid cap growth was the worst performer, and in terms of large caps, it was large cap core, but everything was in the red today. So generally speaking, a pretty red day for equities in the US market, and that was the case globally. Europe was mixed, but we saw China was deep in the red. Same here with Australia, South America, North America. All in all, it was a fairly red day, led just by selling from a couple of the news items we got. Number one, the US government shutdown enters its 7th day. There's no real movement except in the last hour. A healthcare compromise has started to enter the rumor mill after President Trump signaled he was open to negotiating with Democrats over the healthcare subsidies they want to expand to illegal immigrants. Trump also lowered his threats towards federal workers. So we'll see where this pans out. This is still ongoing. Not a massive risk to the market right now. We're brushing it off, but the longer this goes, does become more murky on the surface. It makes the water more murky. Other news that didn't help sentiment today was a report on Oracle came out that its cloud business is seeing lower margins on NVIDIA chips, and it's actually struggling to rent out GPU capacity with its NVIDIA chips. Obviously, this is going to hit the tech space. This is not what investors want to see, that quote, insatiable demand. Investors just want to see that, companies are struggling to meet demand with these chips. And on the back of that news, Oracle really did take a plunge, down 2.66% on the day, really bouncing off the lows right here, pairing quite a bit of these losses, but still down on the day. And the market not really liking this news as well. NVIDIA, same thing. We saw a massive move lower from the highs, however, still flat here on the day, slightly green. So this is telling you that, despite concerns about the demand environment, people are still going to go out and buy NVIDIA chips. At least that's what the market is telling you. And then Constellation Brands, this is probably the most interesting trade I saw. Now, the maker of Corona and Modelo reported a profit of 2.65 cents in earnings per share. The maker of Corona and Modelo Beer reported a profit of $2.65 per share in its fiscal second quarter, a marked improvement from its loss of $6.60 per share a year ago. However, net sales fell 7% and earnings missed Wall Street's target of $3.32 per share. Revenue of $248 billion topped Wall Street's expectations of $2.45 billion. The management cited weakness in employment trends, softening consumer sentiment, and ongoing concerns from Hispanic consumers that are leading to fewer gatherings, ultimately masking the earnings miss. Constellation Brands also lowered its adjusted outlook to $9.80 per share from its previous forecast of about $10.70. So we actually saw a guide lower there, and net sales are expected to decline about 4% for the year. And the stock is up 1% on pretty much mixed earnings and a guide lower. The stock's up 1%. It might actually be time to start looking at this name as a way to generate alpha into 2026. Generally, when stocks rise on good news, that means everything is already priced in. And then looking at stocks that are really moving today or I should say commodities, gold just clicked the 4,000 mark for the first time ever. A little bit under that right now. Absolutely insane what we're seeing from gold. It just continues to power ahead, up 0.5 percentage point today. And for everything we saw today, guys, those 1,900 advances, 4,400 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 down 0.4% here today. And we again lost the 5-day. We lost the 20-day. So these shorter term moving averages, our medium term moving averages continue to remain long. And this is ultimately what's keeping us positioned in the market. These longer term averages look very, very healthy, but we are seeing a little bit of noise, a little bit of movement here in the short term averages. And this is something that we need to watch, especially as we got an extended and prolonged government shutdown and as we got that news from Oracle. Now, as you can see, a broadly red day for equities led by mid caps, led by selling in the small caps. Large caps faring better than usual, at least against some of the equal weighted S&P 500 and mid caps, but still a down day for equities as a whole. And that's just bad news circling, as well as us just being at all-time highs, looking a little frothy. We were talking about this a little bit yesterday when we look at some of our strength indicator stuff like the RSI. We were looking a little bit frothy here on the weekly chart as well as on the daily chart here yesterday. And so to see this move lower, not unexpected, but again, we all know that ultimately in this market right now, the only thing we are doing is looking for dips to buy because equities are strong. I mean, look at this weekly chart. Extremely, extremely strong momentum. You just can't deny that fact. We also saw selling internationally, Europe stocks, Middle Eastern stocks, China stocks, India in the green right here. Cryptocurrency really taking it on the chin, but cryptocurrency has been up like 15% in the last 7 days. So to see it pull back a little bit here, healthy. This is a good thing. All we need to see now is the bulls hold these key support levels and then onward and upward from there. The dollar was up 0.5 percentage point today. Very, very strong. As yields fell, the 2-year and 10-year yield fell. Volatility ticked up. Now, macro assets giving us very mixed reviews, mixed performances, all in all. And the gold was up and the silver taking a bit of a breather here, down 1.79%. But let's quickly talk about equities, guys. Now, we are seeing a little bit of a breather. To be honest, this is absolutely nothing to be concerned about, as you can see right here on the daily chart. Sure, you may look at this and be like, well, it looks like a bearish engulfing candle, but it's just we're down 0.5 percentage point on the day after just literally making higher highs, higher lows with very, very thin pullbacks in the market. And you guys know that even if we were to have like a 5 to 10%, call it a garden variety pullback here in this market, that is just an opportunity to buy the dip. And let's say we are to pull back 5%. Where would that take us? That would roughly take us to this level right here, the 6,300 area, right? And if we are to actually go ahead and put in a 10% pullback, that would roughly take us to about this level right here, call it the 6,000. So anywhere from the 6,300 to the 6,000 level, let's say we are to start a prolonged pullback in this area. This is ultimately where you want to be buying the dip. So you're looking at this area right here. Now, I do know it's a very, very wild area to look at, right? When you're saying, okay, you're going to pull back to the 63 to 6,000 level, and this is ultimately where you want to be buying. Are you going to be buying at the top? Are you going to be buying at the bottom? And you know the general strategy. Generally speaking, we want to be buyers or adding to our position. Generally speaking, we want to be adding to our position right here at the 5%. Every 5% pullback, we want to be adding. So right here at the 5% and then right here at the 10%. You probably can, look at the midpoint, but the truth is sometimes we might not actually get there. Then you miss your entry. Sometimes it might be the best entry because then you actually get a better entry. But all in all, this is the type of risk management I do look at. But I'm not saying we are going to pull back. I'm not saying we are going to crash. I'm not saying we are going to actually do any of this. All I'm saying is that if we do get a pullback in this market, if this bearish engulfing candle that we're seeing right now has followed through and we do start to see a prolonged pullback, let's say in this October period, 6,300 is a great support zone, and from there 6,000 because it's 5 and 10%. And these are generally psychological levels that investors tend to look at. Now, looking at the Nasdaq 100, very similar situation. I mean, all-time highs right here into higher highs, higher lows. You just can't hate this chart. And again, any pullbacks, buy those dips, because later on in the video, I'm talking about the mega caps and their earnings, right? And this is an earnings driven rally for the mega caps. And, if you want to play the mega caps and you don't want to hold an individual stock, buy the Nasdaq 100, the ticker, the asset is QQQ, the Invesco QQQ Trust Series 1. Looking at the Russell 2000, yeah, not a pretty picture. We literally made all-time highs yesterday, pulling back to be expected. I do think we're going to make a series of new consecutive highs, but we're cooling off. We're cooling off after what has been a fantastic week, a fantastic month, and so far a fantastic year, especially if you bought those tariff tantrum lows. lows. The RSP down half a percentage point, similar situation. We pretty much made all-time highs in the last few trading sessions, and now we're just pulling a back, and very similar situation across the board. For example, Bitcoin, we just made all-time highs. We're just pulling back. I think Bitcoin can pull back to the 117 area right here, but ultimately this is what it's got to hold. It has to hold that 117 area. And if we are to take a measured move, right, there's not a lot of room for the bulls to work. You're looking at 3.57%, because if we actually break this 117 area, we do risk going all the way back down to 109. So Bitcoin bulls, start making a move right now. Nonetheless, this is constructive price action right here. Very, very constructive price action at these highs. As you can see, making new all-time highs. There's nothing more bullish than all-time highs. Ethereum, this is where things start to look a little bit dicey for Ethereum. I'm actually going to go ahead and we're going to make a trend line right here. You can sort of see that we are somewhat in a wedge pattern. We then go ahead and just copy this and put it at the bottom of the range right here. You can see that we are somewhat in sort of a wedge pattern, rejecting at the top end right here. I've seen a lot of people draw the wedge like that. I think this is far better at the moment. So right now we are rejecting this wedge pattern right here. I do think that because we actually failed to make an all-time high or an equal high here for Ethereum, we can actually go ahead and have price discovery at the 4,000 level. So I do think we're probably going to see Bitcoin outperform if it can hold the 117,000 level. I don't like the price action I'm seeing from Ethereum at the moment, especially, making these equal highs right below all-time highs, technically a lower high. So I do think we're probably going to have price discovery lower here. Nonetheless, I am still bullish long-term, and I do believe ETH, the asset, and the entire financial market coming on chain, and Ethereum being the chain that they are going to build on. Nonetheless, this is the type of volatility you expect in crypto. 4% days, 2% down days. You just got to be prepared for that. When we look at some of our other assets, the dollar is seeing a bit of strength. I do think we probably move higher here despite this government shutdown. We may actually move higher. It looks like the dollar wants to move a little bit higher. The 2-year yield falling. It does look like we probably are poised to go lower, along with the 10-year yield right here. And then when we go look at gold, guys, gold continues to just outperform. It continues to just parabolically go up. I'm personally not entering right here. I'm going to pull back. But if we do get a pullback to this 34 area right here, 34, 38, I'm a big buyer in gold and actually in silver as well. The silver area I'm looking to buy is probably the $35 area. We'll see if we get there. If not, I definitely missed that trade. But all in all, silver and gold, I do think go higher into 2026. Guys, and diving into sentiment, this is the fear and greed index, and we've ticked into the greed zone from the neutral camp despite being at all-time highs, despite being incredibly bullish. This is simply fuel for the fire, and I know I've been saying that for a couple of weeks, but all the market has done for the last couple of weeks is make all-time highs, and when we've had pullback, it's been very shallow, very sweet, and we continue to make those highs. So this right here, I just see this as simple fuel, especially as we enter Q4, which is historically very, very strong. In fact, the average return is 7.7% here in Q4, when the S&P 500 is especially up in Q3 more than 7.8%. So guys, you know what they say, momentum brings momentum. And the market has momentum right now, so expect more of the same because that momentum is driven by fundamentals. Earnings growth here for the third quarter looking extremely solid. And in fact, if you actually exclude the energy sector, right? Exclude the energy sector right here, you're looking at 9.6% earnings growth. And this is Q3, guys. This is the most recent quarter we're in. Only 19 companies have reported, but so far so good. 73% reporting above analyst expectations, and earnings are expected to be good. We are seeing very solid revisions in the Magnificent Seven. You can see they've definitely led the pack. However, we have seen up revisions in the S&P 500 and very, very mild up revisions in the other 493. So all in all, earnings revisions and earnings are moving to the upside. However, the bulk of earnings are driven by the Magnificent Seven. They are growing the most. That is ultimately where you want to be in 2026 because that is what this chart entails. It's revisions for 2026 consensus estimates. And when we look at the macro, guys, growth for the third quarter looking really, really good. Still at 3.8% fluctuating, but we're still looking at very, very robust growth for the quarter. And when we look at the labor market, now there's been a lot of chatter about the labor market weakening, and that it has. However, when we look at the American Staffing Association, the ACA index, which tracks weekly shifts in temporary and contract employment, it just turned positive for the year for the first time since January 2023. Guys, this is a leading indicator for non-farm payrolls. The labor market is recovering and has likely bottomed. It's just not showing in the NFP data, which is lagging data. This is telling us the labor market weakness, very likely it's behind us, and we are now poised to see the labor market improve. But we're not going to get a lot of government data because the government shutdown is in full swing. The biggest data print for the rest of the week is the FOMC minutes. We have a couple of Fed speakers, Kashkari as well as Bar Mazalim is reporting as well. And guys, they're going to be extremely neutral, especially as the government shutdown continues to loom. So expect a nothing burger. And then with regards to earnings, there's literally nothing. The big names are on Thursday, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.